Petty cash. The petty cash fund. This is an amount of cash kept on hand to pay for minor expenditures, while the size of and scope of petty cash funds will vary across companies. Its operations will involve the following three activities: establishing the fund, making the payments from the fund, replenishing the fund. Welcome to today's screencast. Now, we'll be heading further in to the petty cash fund. Firstly, establishing the fund. This is done by writing a check for the amount of the fund, cashing a check, and then placing the cash under a designated employee, formerly known as a custodian. A journal entry is then made to record the transaction, debiting petty cash and crediting cash for the amount of the fund. Now we move on to making payments from the fund. After the fund is established, the cash is used to pay for relevant expenditures, which is generally done in one of two ways. Firstly, cash is taken from the established fund to make the payment. Secondly, employees can seek reimbursement from the fund from payments that they have personally made. No journal entries are made, hence making it important for the custodian to collect receipts. Replenishing the fund. After the period, the remaining cash is counted, and a check is cashed to bring the fund back to the original balance. A petty fund replacement report is created to list all expenses the fund has incurred and to calculate the cash required to replenish the fund. The total receipts should equal the cash required to replenish the fund, since the cash and the fund were used to pay for those expenses. A journal entry is then made, debiting the expenses and the expenses incurred by the fund, crediting the cash for the amount of the check. There can be a mismatch in accounts, and in this instance, the cash needed to replenish the fund does not equal the total receipts. Sometimes the custodian may not be given all the receipts or may be given incorrect change, creating a discrepancy between the amount needed to replenish the fund and the total receipts. In such a situation, the discrepancy is charged to a temporary account called cash of and short. Here is an example of the use of this temporary account. The cash needed to replenish the fund is $50, but the total receipts are $40 and $10 difference is charged to the cash over and short in the journal entry made to replenish the fund. This concludes today's screencast. Thanks for watching.